Lior runs numerous successful businesses. He's traveled to over 30 countries in the past decade. He's an entrepreneur and investor. He's the founder of WealthResearchGroup.com. And I am very happy to have Lior back on the X22 Report Spotlight. Lior, welcome back to the Spotlight.
Thank you for having me back.
Hey, thanks for being here. And I wanted to start off with the coronavirus, with the global economy. And I wanted to get your take on what is happening now, because there's a lot of panic. A lot of people are very worried. You see the market bobbing up and down. And I've been looking at so much information. And you have a fantastic report. This is a virus report. And I believe the URL is wealthresearchgroup.com/virus. This is an incredible report that you put together on what is happening, talks about the economy. But I wanted to get from you what you think is happening. Do you think we're headed into a depression? Do you think that the economy is safe? What's your take on this whole situation that we're watching now unfold in real time?
Okay, Dave. So there's three things. There's the virus itself and its infectiousness and lethality. And that's one thing. The second thing is how the public reacts to that. And when I say public, I also mean the markets. And then the third thing is how authorities are handling the situation. So basically, there are three things here. And where all of the controversy is between what the virus is it lethal and is it infectious? And where is the vaccine, etc. And what authorities are dealing with this virus. And that is creating the public reaction to this. And this triangle of three things is creating maximalists and minimalists. Minimalists are saying, look, this is the seasonal flu is much bigger than this. Relax. Even Trump tweeted 2 days ago, think about a seasonal flu versus coronavirus. Relax. Let's calm our volume down by 100 notches here and just deal with this rationally instead of in a state of emergency and panic and National Guard on the streets and closing entire cities and regions and schools. So this is the minimalist. The maximalists are saying, look, this is going to hit 50 to 70% of the world's population. We have no data supporting that this is only a 2% mortality rate because in Italy it's 5%. And we don't know why it's only hitting the older people. It might start affecting the kids soon. We don't know. There's not enough information. And this can end up leading to hundreds of thousands of deaths, even millions of deaths. These are the maximalists that are saying, we need to deal with the worst case scenario, etc. And then the public, which is fed on both the minimalists and the maximalists, they act accordingly. So the maximalists are these people that you see on the videos fighting over the last toilet paper roll in Costco, and you see them brawling over it and stuff like that. And they're preparing, but they're not only preparing; they're literally selling their entire portfolios and are acting as if this is not only World War II. This is bigger than anything else. This is going to cause market closure and the rest of it. And then you have the minimalists who are saying, look, this is a buying opportunity, irrational stuff. I'm loaded up on cash right now, and I'm going to use this to buy great assets that are unjustifiably going lower. So you have both this, and then you have the people who are just washing their hands, eating well, sleeping well, and acting as if everything is normal. And on the flip side, you have people that are quarantining themselves and are subjecting themselves to basically like they carry the disease, even though they don't. So the virus, even though they don't. So that's where we are, and that's the incredible drama that's happening now. Because of this, the authorities have taken the side of let's do whatever we can. In other words, let's declare states of emergency. Let's make sure that schools are getting closed, etc. Dave, when you cannot board on cruise ships, when you cannot go to airports, when there's no gatherings over 2,000 people, when an entire country dependent solely on tourism, like Italy, closes down, when 400 million Chinese were quarantined at one point, this is causing problems for small businesses that just cannot survive. And I'm not just talking about small businesses like a little shop. I'm talking companies that are 100, 200, 300, 400 million dollars in market cap. They cannot survive a sustained period like this, especially leveraged companies like oil developers, oil explorers, oil operators, other companies that have derivative and indirect exposure to this, like banks. This is a big problem, not because the virus is that lethal. We all see the mortality rates, the fact that most people just recover from it like it was the flu, exactly like you said, even before there's a vaccine in place. So the vaccine is going to be ready in about 18 months if it's a world record. So don't expect a vaccine. The mismanagement of this, or the potential for mismanagement of this crisis, is the thing that can really cause the economic destruction. Markets are very liquid, the public markets. So many people act on sentiment and just sell everything, sell liquidation prices, and just probably will not touch a stock for 3, 4, 5 years. And on the flip side, there are people that are actually on the other side, right? For every seller, there's a buyer in this market. And you see very astute, sophisticated veterans that are telling you, we are buying. Right now, we are buying. The indices are down 15 to 20%. Some individual companies, blue chip companies, are down 45 to 50% already. So definitely we're at a point where if this doesn't escalate in the next 2, 3, 4 months here to a wave of defaults and contagion and market contraction to where credit is dead and banks are not lending, etc., then this in Q2 and Q3 you're going to see all the slack of Q1 and all of these problems that we had in Q1. You're going to see them rebound in Q2 and Q3. That's one option. The second option is if there's a lot of pressure on Washington and on Trump and on the Federal Reserve, and I'd love to talk about this because there's some insights that I'd love to share about what I think Trump is going through right now. Obviously, because it's also an election year, and because of his own personal past and dealing with crisis in his own life. If they don't handle this correctly, the United States is the big deal right now. It's the world's largest economy, and in China, we've already seen that they've recovered quite extensively. Just to give you an idea, Starbucks has 4,500 branches in mainland China. They closed 80% of them, and now they've opened back 90% of them. So just so people get updates on what's happening in China, they're in recovery mode, in full recovery mode over there. Even Trump acknowledged it, etc. So I think that's the big deal, Dave. It's not whether or not the virus is that lethal. We know it isn't. It's whether or not authorities make huge mistakes with what they're doing, and even deliberate mistakes. I'd love to talk about that as well. And this thing drags on and becomes a full-blown depression, and what to do in that case as well. And thank you for noting wealthresearchgroup.com/virus, because I've worked on that for many, many hours to put an A to Z on how to prepare from your kids to the economy, to your portfolio, and obviously with our newsletter, that's basically all we cover right now on the free financial newsletter on wealthresearchgroup.com is the coronavirus.
Now, I mean, we talk about the virus, and like you said, it's not what everyone thinks it is, because if you look at the mortality rate and you see what's happening, it's really the fear push that the mainstream media and a lot of individuals are pushing right now. Because when you hear trigger words like shutdown, closures, quarantine, it doesn't mean people have it. It doesn't mean, oh, because we're shutting down the school, that the entire school has it. They're doing it out of fear. Fear is what is driving the market. Fear is what is pushing, people to sell their socks, to go and purchase as much toilet paper as they possibly can. It seems like the fear push is off the charts right now.
Off the charts. And, it has to do a lot with the interests of the media, because obviously covering something 24/7 when everyone's at the house in self-quarantine, not leaving the house. If you talk about profits, this is profiteering. off of crisis. When you have the media doing this on purpose, and they are doing it on purpose. I mean, you can cover it 24/7. That's what's happening right now. And these corporations work on ad revenue. It's also an election year, and we saw polls yesterday, the first ever polls that say Biden is actually looking like he's in the lead. And I want to talk about this a little bit. Because this is an election year, there is a lot of incentive for the Democrats to push this into higher limits of fear. For one thing, what is Trump's platform? If you go to wealthresearchgroup.com/election and /media, those are two reports that I wrote especially about how the mainstream media is literally designed to overthrow Trump or get him not reelected. The corporate media is 100% looking to make sure that we don't have Trump until 2024. Now, I'm not an American. I'm not a Republican, not a Democrat, not even a voter, right? But I'm telling you from the outside how it looks. It looks fake, and it looks engineered and massaged. It just looks that way and feels that way at every single update that they do. The way they regulate his media versus other candidates' media, and it's literally disgusting a little bit. Now, what is happening? The stock market and unemployment rates and everything that has to do with a 70% consumer economy, which the U.S. is, has to do with Trump, right? Deregulations, corporate tax cuts, what he was able to do with the tariffs and eventual phase one deal. Confidence was an all-time high. Many millions got back into the middle class. Food stamps got dropped by several million people. You saw real changes in the United States in the past 4 years. Real changes, deregulation, people's businesses saying it's easier to do business, easier to open a business, etc. So that is the main thing. Now they took it away from him. Now he cannot do victory laps on what's happening with the economy, even if there's record unemployment. Nobody cares. That's not where the narrative is. So they took that away from him. Obviously, what they also took away from him are rallies and gatherings. Those will be postponed, or something will happen with these rallies where he excels, where he gets the public engaged. Debates might even be postponed. Dave, the elections could be postponed at this point if this is not managed right. Think about it. These are millions of people, 126 million people that go to vote. They need to go to ballots. It's mass gatherings, etc. You have to consider the fact that might be postponed as well. This is a manufactured crisis to a point, right? The virus is real. It's not like it's not having its death tolls on the world and infectiousness, etc. So I'm not discounting that. But what I'm saying is there are ways to deal with things. Could you imagine if every year we dealt with the seasonal flu in this way, or with other disease that we have? It's just disproportionate. So that's one thing that's really important to stress. I think there's a clear capitalization on the economy getting worse from Democrats, and they're the first cities and states, the Democrat-led states, that are going to issue these state of emergency. We're closing everything down. They're going to pressure Trump. We're going to put the National Guards in the street. And what they want to do is put him in a corner where he just makes mistakes, any mistakes. But they want to pressure him. On the one hand, what they want him to do is do a big bailout. And then all the Republicans will say, well, hey, Trump just bailed out Wall Street. He said he would never do that. And that will be the narrative. If he does nothing, then they'll say, hey, he was a very passive president, not a hero, not a leader. When we really needed him, he went into his cave and did nothing. He really is in a situation where it's hard to win, but he has won against every thing that they throw at him. I think some of his personal opinions also play into effect here. He's a person who's in his own life went from being a billionaire to being 1 billion in the hole, restructuring all the debt and working with banks and with his creditors and with everything else, and rising back from the ashes to become a billionaire. And so in his mindset, he's a capitalist. He rather have bring to the White House all the CEOs of the banking firms, the pharmaceutical firms, the cruise ships CEOs, the hotels, airlines, and start working on a capitalistic solution than just blanketing everything over with an insurance stimuli plan that's basically out of your and my and everyone else's tax money, and obviously the next generations. So before he does that, I think he wants to really let the imagination of the free market work, see what happens in a free enterprise economy. And as you know, in 1 week from today, as we're doing this interview, the Fed is set to cut rates by about 75 basis points to one full percentage. So if you're the president of the United States and you have that wish for a year and a half that the Fed will lower rates basically to zero, and you're 6 days away from it if you don't do anything, I think that's also a key factor in why he's holding back. He's holding back until the 17th. He sees what the Fed does, and then he can, roll out the heavy artillery. And lastly, I think he appointed Mike Pence, the vice president, as the czar of the coronavirus, or the leader of the task force, in order to have a sacrificial lamb. And that's important to also understand, a patsy. So he's holding on to that card of saying, hey, Mike, thank you for everything you've done. There have been some mistakes. Let me take over. And then you can become the hero. And obviously this also has to do a lot with his election considerations and how he wants to appear for the public. So I think there's obviously this is a huge chess match. And that's exactly why I just published wealthresearchtube.com/checkmate to show you how Trump is calibrated in each step of the way, and how he personally in his own life overcome many atrocities during the first term, how he overcame many of these attacks that happened sometimes weekly and daily on him, and what I think he plans to do going forward with the economy and with everything that's going on with the coronavirus.
I agree with you, and you mentioned restructuring, and that's what I see happening right now, a great restructuring, a great transition of the economic system, because think about what he's doing during this crisis. He is now showing the world that the globalist model that was in place with these supply chains, they don't work. Europe right now is rethinking their supply chains with China. Corporations are rethinking, well, maybe we shouldn't have all our eggs in one basket. Maybe we shouldn't be doing it this way. He's actually showing everyone and actually allowing the world to adjust to a new system, not a globalist system where they can change their supply chains. He's also changing a lot of the regulations right now, because during a crisis, you have the ability to do quite a bit because it's an emergency, right? So he's allowing certain regulations to be reworked, like payroll taxes. He's negotiating with insurance companies. He's negotiating with corporations. He's restructuring the company during this crisis. And I do agree with you that when everything is all said and done, because he's said this multiple times, he even said it to Xi Jinping, that the heat, the warmer weather will help. And he told this to Xi Jinping in a tweet. And like you said, in China, they're in recovery mode right now. The same thing's going to happen here in the US and the rest of the world. I believe the people that are pushing this only have a certain period of time until everything starts to reverse itself. And the other thing I want to say is I think he wants to detach himself from Obama, because if you remember, Obama came out and said, oh, I'm the one who made this economy. With this economy and the market coming down and Trump then rebuilding it later on, he detached himself from Obama, saying, well, you didn't make this incredible recovery. You're not the one who brought us from this, the edge of disaster, and you're not the one who brought it all the way back. I was the one who did that. So your claim that you made this economy no longer applies to this. And I think he's doing this, and he's using this time to do this on purpose.
Sure. Look, there's another thing that has to be considered here, and that's leverage. So 3 weeks ago, we were at all-time highs, and there was a lot of leverage. The retail brokerage firms, especially Robinhood, for example, they were the record volumes days were just before the crash. So there was so much hype, leverage, and confidence with investors that are rookie investors that have not been through 2008, that have not seen problems before, that have only seen they did see December 2018, but they saw it in a way that, man, in 1 month, all the losses were erased and we were back off to the races. So you have to understand that what's going on in the markets has a lot to do with the fact that people have been called for margins. People have no experience in how to deal with situations where the markets go down like this by 10% and 12% in 3 or 4 trading days, and then reversing half of it, and then going down again and reversing that. These are very, very rare times. In terms of data, again, if you go to wealthresearchgroup.com, you'll see everything that we put together on this. Some of these trading days occur only in the Great Depression, 1929 to 1932. This is how bad some of these got. And it has a lot to do with leverage, Dave, and a lot to do with ETFs, right? All of these ETFs, there are thousands of ETFs, but they're concentrated in the FANG companies, and they're concentrated in the big names. So when all of these ETFs and algorithms start selling, and the S&P 500 is so much overweighted on Microsoft, Apple, Amazon, and Google, then you see these large moves down. There is no escaping it. And so some of this has to do a lot with how companies are having to restructure themselves from within. I'll give you an example. There are many funds that all they think about is, okay, there's going to be massive withdrawals. I need to sell positions. I don't care if they're good positions or bad positions. I need to just have cash in case clients call tomorrow and withdraw their funds. So a lot of these decisions, billions and billions of dollars worth of decisions, are not made because they want to sell or because they don't believe in the company or because they don't believe in the recovery, but they're just internally, as a company, they need to have, or as a fund, they need to have liquid cash on hand. So you have to also think about that. That is causing a lot of exaggerated selling as well. And finally, remember, like you said, with every crisis, there's a lot of opportunity as well. And we have to consider that some of these companies that are going down right now in price will actually come out of this much stronger because their competitors were weaker. They'll be able to snag bigger opportunities. Basically, what this virus did was weaken some companies that were leveraged, right? Or that had toxic debt or that didn't have a great business model. But the ones that are strong will obviously gain more market share as this crisis starts to subside. So you have to really consider this not as black and white, and you have to keep calm during all of this. I know we haven't seen anything like this in our lifetime. We haven't seen cities closed. We haven't seen quarantines. This is not something that we see every single day. It's big. It's huge stuff. Not the virus, but the management of the virus. It's big stuff. And it will cause a wave of defaults for some industries if the government doesn't come and make a big old aid and stimuli program. But I think what Trump is doing is he's looking at this as I had a list of stuff that I wanted to accomplish in this term, and if I got elected in the next term. And I think what he's trying to do is pass these through, all of them, right now, if he can, because he knows this is the only time that the Democrats will not want to appear as intervening, right? As Nancy, the second he tweeted that Nancy Pelosi is only going to be ready next week for talking about a bailout program and what they want to do, the Democrats cave and said, no, let's come to the table. You're doing a great job. Let's start doing it. You don't want to appear as the problematic as putting a stone in someone's shoe. You want to be saying, hey, let's put politics aside and do whatever it takes to protect the American people. So I think that's his chance right now, his golden chance to put a lot of things together. And if you believe in his policies and his agenda, then I think you'll see a lot from him in the next month or two.
Yeah, and I do believe that he's very calm with the situation, especially with the economy. I'm not talking about coronavirus where they're really blowing this out of proportion and the mainstream media is pushing panic and fear and everything else they can throw at this. And I know we haven't seen schools, airports, and all this shut down like this before, but we have seen diseases or viruses or whatever you want to call it show up in the past. I mean, we've had MERS, SARS, Ebola, and all of this. And it's funny because each one of these things happened during an election time, which is very interesting. And they also had projections at those times that, millions of people were going to be infected. It's going to be an awful thing. This time, they're just taking it to the next level. And I think what's my personal opinion, what I think is going to happen is that Trump, he understands what a bankruptcy is. He knows how to handle defaults. He knows how to handle hard economic times. He doesn't panic. I think what he's going to do at this stage, I think he's using this to his advantage. Like you said, he's going to have them pass a lot of the things that he normally couldn't have them pass in the past because they wouldn't do it. Now with the crisis, they probably are going to do it. But I think he's going to come out of this a lot stronger because think of it, if the market starts to move up again, things start to calm down, and he brought us out of this dark period into this light period, people are going to look at him completely different than they've ever looked at him before. And the plan of the mainstream media, the Dems, and everyone else, that plan has failed. So they only have a period of time, and I think he's using this to his advantage. And I think he's deflating the bubble that was blown up by the central bank in the past and himself, because bubbles pop. And this is really like a deflation of it, so he can reinflate it because he doesn't want it to pop before the 2020 election.
And Dave, I think it's really important to talk about what can happen here with inflation. So with rates on the 30-year bond going below 1%, the entire yield curve, so from 30 years to 2 years, you can borrow now, if you're the U.S. government, at 1%. That is quite remarkable. People are refinancing their mortgages. They're taking out new mortgages. If you want to arrange a meeting with a mortgage broker, you're going to have to wait a week and a half, 2 weeks. They're swamped. Banks are actually hiring right now to handle the load. And remember, this is and oil. It's as you've seen, it's had the worst day ever. The only time that oil was this distressed was in the Great Depression, where there was such a glut of supply, such flattened demand, and no political incentive to cut the supplies. So all of this is like literally bottom inflation. You cannot go any lower with inflation. Oil can literally, mathematically and physically can only go up from where it's at. Unless you're going to see, because there's going to be so many companies that are going to go into bankruptcy that they cannot handle these low prices. Entire countries that rely on oil cannot handle these prices. Oil prices will probably start going higher, right? Like they did in 2016 when they went from 30 to 60. It's right now back to around that 30 level. So think about that. And that's oil low oil prices are actually phenomenal for everyone except for the oil industry. Free energy would be the best thing ever, right? So because your cost of doing everything would drop. So all of this is right now happening. You have lower prices. You're probably going to see, Dave, lower prices of everything. Your hotels will be cheaper. Your flights will be everything will be cheaper. And then you're going to see all of this money that was saved up during this time, because everyone's now loaded up on cash and saving and hoarding. All of that will come into play in the recovery. The potential for an inflationary recovery is incredible. And therefore, I think gold will have an and silver, even more so. As you know, a couple of days ago, gold to silver ratio hit 100 to 1 for the first time ever. So you're going to see a reflationary period that could be very, very strong into 2020 and 2021. There is no reason why gold cannot surpass $2,000 an ounce in that sort of a scenario. And I'm not talking 3 or 4 years away. I'm talking 12 to 18 months. If you go to wealthresearchgroup.com/ratio, that's what we wrote about and talked about even before the coronavirus started. That these lower rates coming into America, where you have an entire generation that has yet to purchase homes, the millennials, and you have contractors working on affordable housing and everything like that, after about 8 years of under construction. This is the recipe for an inflationary period in the United States. And obviously, the dollar is already the most overbought fiat currency. So once this virus subsides and the crisis starts to normalize, you will see a sell-off in the dollar. There is 100% certainty of that. And all of that will play into a very swift and violent inflationary spike. So I think, Dave, that's very important to also keep in mind. And that's why I haven't sold any of my gold during this period. I still believe it has much more potential. And obviously, I'm not even talking about silver. Silver is a phenomenal trade right now, in my opinion, because of what's happening.
So you mentioned the interest rates going lower, that the Fed has its meeting coming up very soon, and the Fed already did an emergency 0.5 point cut, and now you're saying they're going to do another, 0.75 to 1 point cut. They're doing exactly what Trump wanted them to do for a very long time. He's getting his wish. This is exactly what he wants. And it's funny because going into 2020, the mainstream media, the financial pundits, they were saying that no, absolutely not. There's going to be no rate cuts in 2020. It's a political year. We never seen this before. The Fed doesn't like to take sides, so they're just going to keep it the way it is. And now we look how things completely changed. We're in the month of March. The Fed already did a 0.5 point cut, and now they're looking to do even more. And this is during an election year. I mean, what better way to have the Fed cut like they're doing than using this crisis to your benefit? I mean, that's exactly what he's doing. And like you said, once everything subsides and everything starts to get a little bit better, I should say, what is the second quarter and the third quarter of this year going to look like?
Well, if it's a swift recovery, especially in China, worker rights there mean virtually nothing. They're going to keep their factories open 24/7. So they will be recovering very fast. In America, it's 70% consumer economy. So once the consumer feels safe, that's going to be the big important point. But if rates really drop, the mortgage industry is going to come back. There is no reason to rent, or there is a lesser reason to rent when you can finance a house for 30 years at 1%. I mean, this is it's almost a delusionary period of in history with interest rates where they are. It's absolutely absurd to think about how expensive a bond is. So the lower the yield of a bond, the more it's expensive. Bonds are so expensive right now compared to stocks that stocks are a bargain. Now, I'm not saying stocks are a bargain in absolute terms, right? I'm not saying stocks are cheap. What I'm saying is, compared to a bond, a stock is like the second coming. The 10-year treasury yield, the barometer for all asset prices around the world, the risk-free asset is what it's called, is yielding less than 1%. And in a world like that, the S&P 500's 1.8% dividend yield, coupled with the fact that earnings per share for the S&P 500 has grown year over year for over 100 years at 6 to 8%. I mean, there is no comparison here. So I think it's really important to understand that there's a lot of reasoning and logic behind a continued bull market. So there's a difference, Dave, and it's important that listeners understand this. There's a difference between a secular bull market and a cyclical bull market. Cyclical bull and bear markets, the bull market usually lasts between 5 to 7 years, and then a bear market follows with around a year to a year and a half. Those are cyclical, but they're happening within the context of secular bull and bear markets, which are much longer. So the 1982 to 2000 bull market was a secular bull market. Within it, there were cyclical bull and bear markets all of the time. And that's what confuses a lot of investors. And that's why in a period from 1982 to 2000, where the S&P 500 returned about 16% per annum, almost identical to what Warren Buffett's historical performances that brought him fortunes beyond belief. The average investor returned 3.8%. So let me say that again. If someone would have been put in a coma in 1982, and all he did before he got into a coma was buy the S&P 500 and held it through thick and thin, through 1987, through the Gulf War of 91, through everything, he would have made a fortune. All of the investors that were glued to TV screens and were just going in and out with all of the noise, they made 3.8% when inflation was around 3.4%. So they, for 20 years, made zero money. It's incredible. And it's going to happen again and again and again. There's a big difference between cyclical bull and bear markets and secular bull and bear markets. And right now, we are within a secular bull market that started in 2009. Within it, there have been bear markets. Now, people think that this was an 11-year bull market, but we have had, judging by indicators that are not only that arbitrary 20% decline. There are other indicators for bear markets. There have been bear markets within the last 11 years. We've seen the 2011 Greek default crisis. There was the double dip recession. There was the fiscal cliff. There was 2016. There were 2018 and 2019. We've had shocks that were big and triggered bear markets via other indicators of a bear market. So just remember, you've been through a lot in the past 10 years. If you were able to hold through thick and thin and you understand how markets work, I think most people that have been through this are mentally prepared for almost anything. And that's really important to put in context. Now, where does the second quarter and third quarter and onwards continue? Like, unemployment is very, very low in the United States. 160 million people are working more than ever before, and you have plenty of incentives for people to go back to work. You see people that haven't worked for 10 years going back to the workforce. In my opinion, we are going to see a very strong recovery, but I don't think it will be a classic V-shaped. I don't think this will resume and erase everything that's happened in several months, but I think it will clear the coast, like you said, for a great new period. And just like 2008 showed everyone that the dollar is vulnerable, that the banking sector is not to be trusted, just like 2001 showed people that, hey, something can happen in America's own backyard. This will have its own paradigm shifts, and many people will say the global supply chain is way too delicate and way too efficient. Everything needs to just work right for us to have a great life, and we need some backups. We can't just rely just on China. It's not healthy that 80% of the world's air conditioners are made in China, or the 68% of the world's shoes are made in China, etc. Obviously, we know everything about intellectual property theft and stuff like that, and technology and 5G. Now we have an even bigger reason to be more independent and compete on quality. Obviously, no one can compete with cheap labor countries on price. But what Trump has been able to do with the tariffs is to say, okay, you're a cheap labor country, fine. Well, here are tariffs. Now we're equalizing the field. So he has done many revolutionary things, and I think using ingenuity and imagination and creativity, the United States has a very bright future. Nothing has changed. It's still going to be a very dominant economy, the number one economy. The biggest problem it faces is the national debt, and what I believe will happen is that if rates go to zero, then the U.S. will start issuing 50 and 100-year bonds that have basically no interest rates on them.
So what does that mean for the debt, though?
Well, at some point, but this doesn't really have to be soon. At some point, all of these lenders will have to start taking losses. You will not see a Lebanese-style partial default, what just happened in Lebanon, where the government says we're defaulting. There is no reason for the United States government to default on its debt. The component of the interest in the national debt is about 2 or 3%. I know it's high in numbers. It's $1.5 billion a day that the United States is paying in interest payments, but it still has so much demand for its bonds and such a robust economy, being about 25% of the world's economic activity. So 1 in every $4 of GDP is the United States. It will never go bankrupt by issuing debt. But what can happen is, instantaneously. So it will not happen between now and tomorrow. What will happen at some point in the future, but this, Dave, could be 20 years ahead. So there's no reason to live as if it's happening tomorrow. Don't exaggerate with it as some people are exaggerating with the coronavirus. I am a big proponent of holding physical gold and silver. I do own 24 months worth of living expenses converted into physical gold and silver. If there's a 2-year depression, I have a purchasing power of 2 years worth of my family's life converted into gold and silver. I believe in diversification. I believe in having a second citizenship, or a second passport, which I have. I believe in having life insurance and other safe haven assets. I do all of that, but I'm saying mentally, don't think as if it's going to happen tomorrow, because it won't. There will be a big reset in the future, and the big catalyst for it will be higher interest rates. If there is an inflationary period, 1970s style, the Federal Reserve will never be able to raise rates as Paul Volcker did at the end of the 1970s. And that will be the point where SDRs will start getting contemplated, other tools will start getting contemplated, and man, will your precious metals be worth a lot in a period where no nation looks safe with its fiat currency.
Lior, thank you very much for being on the X22 Report Spotlight. Once again, how can people see all your work?
So if you get nothing else from this interview, just go to wealthresearchgroup.com/virus, because that's our A to Z report on everything that has happened with virus, and wealthresearchgroup.com/checkmate, which talks about all of these key moves, these sophisticated moves that I believe President Trump is going to unleash, and how his entire 74-year on this planet has prepared him for this moment. And the Wealth Research Group newsletter, which covers everything from the big picture economy to specific ideas that I personally invest in, is you have to go to the homepage and simply subscribe for the free newsletter.
Great. I'll be putting all the links at the bottom of the video.